All right, question and answer time. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. All right, so guys, I don't want to, this video here is not really a question and answer. Ryan Rivera and XXS Power, faceless people, or I shouldn't say faceless people, they're actually the real people, but you guys need to understand something, and as you can see, and I wanted to address this to the whole public, and I want to make sure you understand. You say, now you're a bull. Now you're a bull. Now, Ryan, I must say this very, very, very clearly. If you've been watching my market updates for the last week, I've actually been saying things like the Nasdaq. Looks like the Nasdaq has more upside. Looks like the Nasdaq's trying to race to new highs. The thing about this, Ryan, is that what a successful trader does is he bends and molds with the market. Especially if you're looking at a short-term view over the next day or couple of days. Right? So, yes, long-term, I am bearish. Long-term, I am bearish. I think over the next 12 months, I don't know. Over the next whenever, I think we're likely to see a major downturn. Major bear, long-term. Over the next 12 months or more, I am a bear. When that downturn happens, if it happens, I don't know. But Ryan, what you don't understand and what you fail to understand, and what shows me from that comment, is your amateur trader attitude is likely to slap you in the face, send you back to mummy, so you'll put a dummy in your mouth. Because what's going to happen is that if you stay on one side of the market every single time, and if you're trading that way, if you're trading especially short term, then the thing is this: you've got to bend and mold with the markets. Bend and mold with the markets. Because if the markets actually start to form more bullish formations, you need to be bullish. And as I said before, Ryan, that I have been bullish for the last week. I've actually said that obviously the Dow Jones hit there, especially on the Nasdaq. I said the Nasdaq looks like it's trying to hit a particular target and hit that target. And I said it looks like the Nasdaq might even race to new highs. And that's what I actually said here. So Ryan, what you need to understand is this: is that a successful trader bends and molds with the markets. Your attitude of, you need to be, what you're saying there is you need to have one view and only stick to that view. Well, guess what? If you're in that view and you're in that one view, that's what causes you to have big losses and small profits. That's what causes you to have so many excuses or reason why you should stay in a trade when you should be getting out early. That's what causes you to be on the wrong side of the market. Now, a successful trader says, you know what? This is what the market's telling me. I'm going to get in now, but if I'm wrong, I'm going to get out, because I'm going to be flexible with my decision. And I understand that I may be wrong right now. Make sense, Ryan? So what's important for you as a trader moving forward is having the round, flexible attitude. Because guess what? Not every trade you get in is going to make a profit. And the best setups that you get in, some of them just won't make a profit. Guess what, Ryan? Guess what? In some of those trades, you just got to say, you know what? I've got to be flexible and get out of this market. But your attitude there, Ryan, with that, plus XXS Power, I know, right? Bipolar. I'll give you bipolar. Smack around the chops. Is this: if you are in that attitude, that's what causes people to lose a lot of money. Because they're like, all right, I'm a bull right now, and I'm gonna stay a bull, and this market's gonna get to 20,000, and that's just it. And so what you end up doing is you go, you know what? I'm gonna keep buying the dips because this market just keeps going high, so I'm gonna keep buying the dips, and I'm gonna keep buying the dips. And the thing is this, right? It's like, hang on a minute. What happens if the market goes down? Oh, well, the market keeps going back up, so I'm just going to keep buying the dips. That's bullshit. That's absolute bullshit. Because there will be that one time when the market has a flash crash, the market goes down 10% again, and you're left there with all your account gone. Why? Because you weren't flexible with your decision. I have been saying the market's looking bearish because it failed to break new highs and is struggling around there. I thought the market was going to come down. Yeah, based on what I see on the charts. But as soon as the market started breaking up to new highs and I started redoing my analysis again, I had to change bullish because the market was bullish. And I'm going to flow with that. Guess what? And I may take a bullish trade in the markets, and I may be stopped out. You need to be flexible with your trades and with your decisions, because not every trade is going to work out. And if you're so dogmatic, if you're so strict on one view, then guess what? You're going to get slapped around. Like as I said before, you're going to lose your house, your mum's house, your dad's house, your sisters and brother's house. You're going to lose everything you have, and then it's going to send you back to mummy's land where you can have a dummy and you can go back to the bedroom. That's what's going to happen there, Ryan. All right, so this is just some hard truths that you understand. A successful trader is a flexible trader. They flex, they bend and mold with what the market is telling you. Now, my bull, what on earth on the chart is saying that this is a bearish move? None. So all the people out there like Greg Metamorino and everyone else out there saying that there's still a crash, like Bipolar and stuff like that. I don't know. They may be right. But what I'm saying is right now the charts are telling me that this is a bullish move. And I've been saying for the last week, you haven't been watching my videos. So I've been saying for the last week that this actually looks quite bullish here. And I've been saying the Nasdaq looks like it wants to keep racing, keep moving up. So there we go, Ryan. The point that I'm trying to make here, and I'll say it once again, for you, Ryan, and you XXX Power, and for you guys that are so strict on one direction, especially if you're trading short term. If you're trading short term, it's like, guys, you need to bend and mold with the market. You need to listen to what the market's telling you. Not yet. I was a bear. I was looking at the daily charts, right? Guess what? The daily chart formation can change within a week. Right now, Ryan, as I'm doing this video, there's bull flags on the S&P and on the Dow Jones. Guess what, Ryan? They're bull flags. But what happens if they break down? Now it's turning bearish. Even though it's a bullish formation, the breakdown is now turning bearish. What if it breaks up? Well, that's a bullish formation. How can I be bearish with a bullish formation? So you've got to be flexible, right? It's like, oh my goodness, well, the market keeps going up every time, so I'm just going to keep buying the dips. No. Or, you know what, the market's going to crash, so I'm going to keep selling this market, and it's eventually going to crash, and I'm hearing all this evidence, the reason why the market's going to crash, so I'm going to keep selling this market. No, they're both wrong. Selling the market all the time because you think something's going to happen is wrong. Buying the market all the time because you think the government is going to keep it up is wrong. Because in the last 12 months, we've seen three big down moves in the markets. August last year, February, and I think another one as well too. So you need to be really, 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 really flexible with your decisions. Selling because you think something's going to happen is wrong. Buying something because you think something's going to happen is wrong. Buying and getting in and getting out because you have a plan around that and you're flexible and you know that, hey, every trade you get into has a probability of an outcome with a random outcome. That means every single trade you get into, as long as it's the same sort of setup, it has a random outcome. You may get stopped out. That's what successful traders do. So Ryan, if you want to be successful, I would say that you smarten your act up with now you're a bull attitude, and you need to flow with the markets, because that there tells me, listen here, you stuttering bastard, John, spit it out. Don't worry, Ryan, I just said that for you because I know you're probably thinking that because you know you've got a bit of an attitude there. So be flexible with the markets. You need to move forward and be in the markets and listen to what the market is telling you. And if we're building bullish formations, we have bullish formations. As I said before, right now, as I'm doing this recording, the Dow Jones and the S&P have some sort of bull flags. But we need to wait for that confirmation. If it breaks to the high side, the bull flag is likely to continue up. But what happens if the bull flag breaks out? And let me actually bring up the charts here. Ooh, you're gonna cop it, Ryan, I tell ya. So this is the what I'm talking about being flexible is like this here. right? So you can see this is a bull flag. Everything's looking bullish here, right? Everything's just looking bullish. And if it breaks out, we're likely to continue running up. But what if it breaks out and you go long and then it reverses and goes back down to here? You're going to go, oh, well, you know what? The Feds push it up high every single time, so I'm just going to stay in because I'm a bull. No, you get out. Why? Because the flag failed. What happens if the market breaks down? And just say you went short there and the market went straight back up. Or I'm a bear and this is the top and I know this is going to be a top. No, that's what causes you to have those big losses. Big losses. Big ones, right? Big ones. No, you flex and mold with the markets because that's what the markets do. And you've just got to flow with what the market is telling you. Be flexible with the markets. Don't have an attitude of either side. You need to flow and build your momentum with that direction. So now you're a bull? Yes, I'm a bull right now. Guess what? Next week, I could be a bear. Suck it up, sunshine, because that's the way the market is, and that's the way you need to be if you want to get ahead in the markets. If not, take your dummy, go back to home, and go back to mummy. I'm not going to BS you here. Trading is hard. Over my 10 years of trading, I've learned some amazing systems and strategies, and I've put it all in my brand new Grab the Markets by the Balls course, and I'm giving you 100% free access. This whole course is 12 videos long and almost 10 hours of the best systems and strategies that I know. Click on the image below now to get 100% free access right now.